Well, that's the big $10 trillion question, right? Is do we get a blow off alt season? Do we get fireworks? I think if we start seeing a traditional parabolic run here in October, that would be, if you were just taking the fractals of the prior cycles, then somewhere in October, you'll probably see a top in Bitcoin, and probably within a month, you'll see a top in the altcoins. That would be the traditional cycle. I'm not convinced that that's happening. I'm personally would love to actually see it go the other way, where we see a slower, more agonizing grind up over the next few years. And the actual altcoins that have on-chain revenues, product market fit, all those things really start to get chosen by one by traditional investors on Wall Street. And then you see this maturation and you get this like Mag 7 of DeFi, kind of like we have Tesla and Nvidia and all these traditional stocks that are just crushing it and they dominate. I'd like to see that happen in crypto, where you see this cohort of super elite projects just graduate to being institutional grade. And then at times you'll start to see altcoin overperformance. Now, what I think might happen though, and what I think is the fair way to look at this, is you treat it like it's still a 4-year cycle and you prepare yourself to take profits, but you know that there's a possibility that it won't be like that. And you have to be open spiritually to the fact that we won't see a traditional bear market, that we might see a 30% drawdown and then a bounce back.
With Ellio Trades, also known as Ellio Trades, the co-founder of the BlackHole DEX, the biggest decentralized exchange on the Avalanche ecosystem. Ellio, it's so great to have you on the Defiant Podcast. Welcome.
Yeah, thank you so much for having me.
Okay, excited to have you here because I know that other than being a DEX founder, you're also very attuned to what's happening in macro and crypto markets. So with what's happening today, Bitcoin near all-time highs, people speculating that we're starting a new altcoin season, Ethereum really rallying recently. I think it's a great day to talk about markets. So I would love your thoughts. Do you think we're starting a new altcoin season now?
Yeah, for sure. I mean, I'm a big believer that these things are happening very slowly this cycle, and that it's a good thing, and that it's evidence of both a maturity in the market as well as what I see as the biggest cycle that we've seen. And for that reason, it's going slower. But there will only be one time in history that we see the jump from a gray market to a light market or a fully regulated market with crypto. That's only going to happen once. And you're seeing it happen with Bitcoin in 2024 with the ETF. And now you're seeing it with Ethereum getting its digital asset treasury sort of moment. And the reason why it's taken longer for Ethereum is they didn't have the right language to communicate why Ethereum makes sense to Wall Street. And I do find it funny how, these cycles, you can look at them just on the charts and you can start predicting them. And they oftentimes play out in similar ways, they rhyme. But the reasons why things happen oftentimes seem like they are organic or different, or this time is different. Like, for example, Tom Lee making a digital asset treasury and Joseph Lubin. All of that together just sort of supported what we were all expecting to happen, which is Ethereum to sort of rotate into the light at some point during 2025. And so was this, written in the stars? Was this going to happen anyway? Or was this our astrological fate? Or was this just a byproduct of someone on Wall Street with enough of a platform finally explaining why Ethereum is actually so valuable? And then investors now realizing, oh, this is actually great. And so I don't know. I think it's probably a bit of both, right? And the people who stick purely to the tech, the technicals and the fundamentals, the technicals and not the fundamentals, maybe they would have been proven out. And the people who maybe only look at Tom Lee shilling Ethereum and saying, that's why I'm going to buy Ethereum. They're both right for different reasons. And to me, it doesn't really matter, because I'm a big believer that this whole space is going to be worth a lot more. And if you know enough about it, you know that Bitcoin is amazing. It's a great tool to essentially invest in this idea of currency debasement, digital gold. But Ethereum is one of the most important networks and pieces of tech in the world. And it's extremely unlikely to me that it was not going to be repriced up dramatically at one point. And then, you look around the crypto ecosystem, and it's unthinkable to me that this technology wouldn't eventually start hitting sort of mass market product market fit. And it's been pretty easy just to sort of sit back and be patient and have a low time preference. So the answer is, are we having an alt season? I think that's going to be a very contentious thing to say. Obviously, I've been in the camp of beating the drum saying yes, because I think that that's what crypto needs right now is more sort of raw belief, more sort of undying. We don't need any more people saying this is the top, it's all over, blah, blah. There's tons of those voices. I think there's not enough belief that we're at the beginning of a really big cycle of crypto replacing the traditional financial system for the first time with no ceiling on its limit to adoption. Whereas before it was all retail driven. So there was always a ceiling. Now there's no ceiling. We have Wall Street bazooka of money behind Michael Saylor, behind Bitcoin ETF. Now we have Ethereum ETFs and Bitmine and Tom Lee. There's no limit to the amount of money they can access and pull in from traditional markets. So we're going to see a different type of run that might be slower. It might be a slow grind, but I believe that ultimately, this is the process of crypto going mainstream, crypto actually becoming a part of the global financial system. And it's only going to happen once. And I think for that reason, we're looking at probably the biggest cycle that we've ever seen. And who knows how it's going to play out. But when I look out 5-10 years, I see this stuff being worth 10, 100 times more.
If this is going to be more gradual and just part of the process of crypto and blockchains becoming just the infrastructure for finance, does it mean, do you think this could be the last cycle in the way that we've seen them before in kind of there being a huge run up and then like a crash down? Is this different? Like, are we just more like slowly but surely seeing the market cap increase, prices rise? Maybe it'll become more fundamentals driven than like pure hype, or like, do we have something similar where it's like a huge run up and then kind of a correction?
Well, that's the big $10 trillion question, right? Is do we get a blow off alt season? Do we get fireworks? I think if we start seeing a traditional parabolic run here in October, that would be, if you were just taking the fractals of the prior cycles, then somewhere in October, you'll probably see a top in Bitcoin, and probably within a month, you'll see a top in the altcoins. That would be the traditional cycle. I'm not convinced that that's happening. I'm personally would love to actually see it go the other way, where we see a slower, more agonizing grind up over the next few years. And the actual altcoins that have on-chain revenues, product market fit, all those things really start to get chosen by one by traditional investors on Wall Street. And then you see this maturation and you get this like Mag 7 of DeFi, kind of like we have Tesla and Nvidia and all these traditional stocks that are just crushing it and they dominate. I'd like to see that happen in crypto, where you see this cohort of super elite projects just graduate to being institutional grade. And then at times you'll start to see altcoin overperformance. Now, what I think might happen though, and what I think is the fair way to look at this, is you treat it like it's still a 4-year cycle and you prepare yourself to take profits, but you know that there's a possibility that it won't be like that. And you have to be open spiritually to the fact that we won't see a traditional bear market, that we might see a 30% drawdown and then a bounce back. Like, bear markets in the stock market are like 20%, right? And so maybe that's what a bear market for Bitcoin looks like in the future, where we'll see a 30 to 50% drop and then back up. And maybe it's 3 months instead of, or 6 months instead of 12 months. Yeah, it's very, very hard to say. But there's definitely a possibility of a recession. We don't know really what's going to happen. But if you start seeing like parabolic explosive altcoin action, usually that is fairly unsustainable in general. So I would expect for that to be a good profit taking moment. But I'd say the fair way to play it is to have one foot in the supercycle narrative and one foot in the traditional 4-year cycle narrative, and make sure you don't leave so much on the table when we're at all-time highs and when alts are exploding upwards and Bitcoin dominance is dropping. Don't leave so much on the table that you're screwed if the music stops. But also be aware that fundamentally the market's changed, and the marginal buyer that's driven us from K to 124K is the institutions. And they have a different way of viewing profit taking and directional momentum and time horizon than the traditional investor. And I think the Bitcoin buyer, the Bitcoin holder now sees that Bitcoin is making it to the big stage. So maybe it's worth it to hold longer. Maybe the time horizons have changed. Again, we won't know the answer to this until we're looking at maybe Q2 of next year. Then we can start going, okay, has the bull market really continued into Q2 of 2026? Because that would be a different behavior than we had seen in the prior cycles. And so we won't have to wait that long. I feel like we've been in here. I'm almost been in this industry for 10 years. So what's another few months to find out? In the end, I'm more focused on the year 2030, the year 2035, and thinking what matters then, and what are things going to look like then, and how can I prepare? Because if you think just a little further out than the traditional crypto speculator, I think it's really easy to overperform and outperform. And I think the problem is that people are mostly only focused on what's happening this month today, whereas they're not as focused on, hey, how can I position around obvious things that are happening over the next 5 to 10 years? Because 5 years isn't actually that long, and you'll be there in not too long. And if you prepare for it, you'll be really happy. And if you don't, you'll be a bit bummed. And that's why the Bitcoin people are always like, just buy Bitcoin, because in 5 years, it's going to be way higher. And a lot of people are like, no, I want to buy this cat coin or whatever. And that's cool. That might work. But in the end, the people, you're seeing a lot of conversations on crypto Twitter of OGs in the space from 2014 to 2017 who are now saying that they're broke, they can't afford anything because they've essentially just blown up, just trying to chase faster gains as opposed to just buying and holding the stuff that they know is going to get much more expensive.
So what do you think outperforms in the next 5 years? Like how are you playing?
So, I mean, to me, every single law that you're hearing about being proposed, stablecoin legislation, DeFi regulation, change to the SEC, you have to think to yourself, what are the actual innovations within crypto that already have product market fit? And number one should scream at you, right? It's DeFi, right? That is the biggest, most obvious thing. That is a crypto native innovation that does not exist in the normal world. You can't do DeFi in TradFi. You just can't do it, right? DeFi itself, I think, has been undervalued because of the regulatory uncertainty. And so now that you're seeing the laws being passed around the Clarity Act, the Genius Act, the anti-CBDC bill, all of these laws scream to me Ethereum DeFi, right? And yes, every other L1 too, like Solana DeFi, all that stuff, but primarily Ethereum DeFi because it's the most trusted chain. And you're seeing the reason why these big institutions choose Ethereum over Solana. Now, to me, looking at that is enough of a world lens that for right now, I think you're going to see, and it has been the case, I've been screaming about this for the last few months, DeFi is going to reprice because it's now going to have the total addressable market get way bigger, right? The addressable market for a DeFi protocol now includes every traditional market because they want to put every market on chain. So in theory, DeFi itself is, when you look out 10 years, could be 10 times bigger, could be 100 times bigger. It could be a lot bigger, right? And so that's where I get really excited. I think DeFi is one obvious place. Stablecoins, another obvious place to invest. Things like stablecoin specific blockchains like Plasma, which is the new Tether blockchain. Things like the new Circle blockchain, I think it's called ARC or whatever, just announced it. Those types of plays are very, very obvious and screaming. Stablecoin swap pools, like those are obviously screaming.
The PR Genius is a top crypto PR and growth marketing agency, helping brands globally with expert PR and strategic growth marketing. They've worked with 300 plus projects like Movement Labs and IO.net. Unlike traditional agencies, they charge only on performance. Their services include earned PR opportunities and marketing services to help boost wallet holders and organic X followers. Learn more at www.theprgenius.com.
Do you think those stablecoin L1s beat out over Ethereum that already has most of stablecoin market cap?
Yeah, so I think it's not about or. It's not this or that. It's an and thing, right? And I think that people really struggle with and in the modern concept. Like people are like, well, it's this. And someone else will say, well, it's that. And people really struggle with it's this and that, right? And so does a stablecoin blockchain change the need for Ethereum? Of course not. Like they're different ideas, different concepts. Is a stablecoin blockchain probably going to be built as an L2 on Ethereum? Yeah, probably. So that's the relationship. I would say Ethereum is a generalized bet on the world computer, smart contracts, and sort of distributed block space that has sort of the least trust assumptions, the most decentralization. That would be the bet on Ethereum. And then the bet on stablecoin specific blockchains is that this is the application layer that's very, very popular, right? This is the hit app, right? Whereas Ethereum sort of like the infrastructure layer, and then this is like the application layer. And so if you believe that stablecoins deserve their own blockchain, which to me, it makes sense, you'd have a blockchain pretty much purpose built to just send small transactions. That is not really the way that Solana or Ethereum are built. They're built for all kinds of use cases. Having a very specific custom tailored blockchain just for stablecoin transactions like USDC, that makes sense, right? Plasma, that makes sense, right? And so to me, they both have a really interesting use cases. And I like to make this comparison to websites where people would say, oh my God, we have the best website on earth. It's Amazon. You don't need another website. And you say, well, okay, well, I actually just want to watch movies, or I actually really just want to chat, or what? I don't necessarily just want something to buy. Obviously, not all websites will be valuable. Some will be very valuable, but there's always a need or a use case for a new concept that could potentially serve a new market. So not all chains, just because one chain has a really cool thesis doesn't take away the thesis for the other chains. And in the end, I think I saw a statistic like 99.3% of the value in the world is not on the blockchain yet. So there's a lot of more market to attract to the internet of value. And I think that most value will be represented in some way on the blockchain in the future.
Okay, so DeFi, stablecoins, like those are the major narratives that you're betting on in kind of next 5 to 10 years.
DeFi is the sort of 5-year cook. I think that as markets heat up, and you get, is because as Ethereum explodes in value, all of a sudden what's happening? People are all searching the term altcoins because they're like, oh, we thought it was just Bitcoin. What's happening here? So Ethereum, as much as I love it, and I think of it as its own category in a way, it's like the Bitcoin of altcoins or whatever. It still opens the door to other stuff. And people, once they see Ethereum pop off, go, okay, well, what else? And so it's not as shut, right? Because a lot of the Bitcoin narrative relies on saying Bitcoin and nothing else, right? And Ethereum's narrative is actually basically saying that's not true. So to buy into Ethereum is to buy into altcoins, right? And that doesn't mean all altcoins. But I think it's really a stretch to say, once you go Ethereum, nothing else besides Ethereum. That's crazy. So I think that once you start opening your heart and what we've seen is your institutional flows to Ethereum, like we've seen now Ethereum's outpacing Bitcoin as far as new money coming in. Well, it's extremely hard to then tell those buyers, oh, by the way, it all stops here. Nothing beyond Ethereum now. Just Bitcoin and Ethereum, even though Ethereum fundamentally is built upon NFTs, DeFi, DEXs, all these other pieces that make up why Ethereum. And so, yeah, I think it is a gateway drug in a lot of ways. And that altcoins in general now, the perception of them is starting to turn. It's a big ship, but for the first time since 2021, the public is searching altcoins saying, what are these things? And why is everyone talking about Ethereum? What is it? What's happening here? And so we've seen this game before. It's played out before. It's taken a little longer this time. But just to summarize, once that starts happening and risk returns to the market, that's where you get the sort of beloved altcoin season where all kinds of stuff starts popping off. But what I'd say is that if you take a sort of 5-year view of the markets, it's likely that DeFi protocols, like the elite DeFi protocols, will gain institutional adoption. And that means that they'll get passive bids from Wall Street that will probably allow them to continue to grow outside of this traditional sort of 4-year cycle, right? They'll probably be able to continue to grind up in market share over time, like you would see with an equities play, like a nice stock, as opposed to, hey, once every 4 years, we see this thing go to the moon and then die, which isn't really good for adoption, right? Because you have essentially a lot of blood on the highway. And then in the meantime, you have a lot of people capitulate because they can't wait that long. And so I think that it will be very good to see like a Mag 7 of DeFi emerge. But I also think that you'd be foolish to ignore the fact that all the other categories, memes, AI, gaming, NFT, all that stuff is coming with it, right? And there will be seasons for those, and it'll be harder than in the past, but those seasons will come for sure.
Yeah, exciting times. And we have kind of the macro tailwinds too, with expected rate cuts coming September, October. So that just like adds fuel to this fire, increases risk appetite, right?
Yeah, for sure.
So let's shift gears and now talk about BlackHole. So you launched this DEX on Avalanche, I think like very recently, like May, and it has very quickly become the third largest protocol on Avalanche by TVL. I saw that today was a record in trading volume on the DEX. So congrats on that, over 300 million. So yeah, I'd love your motivation, to hear about your motivation behind BlackHole. Like what pain points were you trying to fix with this DEX?
Yeah, so obviously, as a founder of a protocol, which is the original protocol that we were building BlackHole under, called Superverse, which is this sign right here, we wanted to create more utility and value for the holders. And we constantly would hear about issues with products or projects not being able to get supported on centralized exchanges. And then we also saw the centralized exchange listings perform really badly. So we wanted to kind of provide a path for high quality projects to attract enough liquidity on chain that they wouldn't need these centralized exchanges. And we saw the V3.3 DEX movement become prove out to be very sustainable. We saw that obviously the most well-known V3.3 DEX in the market is called Aerodrome. It's on Base. And we saw operations that or opportunities that we saw to improve upon that model, add new features. And we did that. And so part of it is, the need to constantly deliver new stuff to your existing community. And part of it is that we saw opportunities to improve upon a model. And what we've seen is that we were right in that BlackHole has, I don't know if it's the fastest growing DEX in history, but it definitely is probably in that conversation. Certainly, it's the fastest growing DEX ever on AVAX. And it has come to occupy the vast majority of revenue on AVAX, more revenue than any of the other apps on AVAX combined per day. And so that's within, we just hit 1 month, right, of this thing being live. And obviously the beginning of any protocol is extremely volatile on, the token price and stuff. But the reality is that the statistics on DeFi Llama, if you look at revenue, DEX volume, it's explosive up and to the right. And so this has been an incredible process to watch. And the opportunity now for people to be a part of the project has normalized to a point where I think it's extremely good time to be checking out the project. Extremely good. So, from my perspective, I'm extremely grateful that the market has given us this response, but it also shows that what we're building is serving the market the way it wants. And I'm just excited to expand what we have dramatically, because what we've shown is that having a new model and a new tech stack and a new community has pushed the AVAX DEX volume and DEX revenue sector to be much bigger than it was before we arrived. It's not just taking away from competitors, but it's adding net new amounts of value there. And so that's what I saw. That's what the data shows. And so I'm extremely excited by what we've seen in just this first month. But as people know, I've been running a project called Super since 2021, and quite famously even though we're listed on Binance now for almost, coming up on 4.5, 5 years, I've never actually taken any profits out of that project. I have a very long-term view of success, and I'm very, very committed to that project long-term, as well as now BlackHole. And so I think a lot of people get caught up in the short-term noise. But one thing that I'm excited about is that we now have an extremely profitable and successful and fast-moving piece of technology that I'm excited to help scale into the future. And I think people will be really excited once they figure out what we have planned, which we are not at liberty to discuss yet. But yeah, we're really just getting started. This is like an MVP that people see. This is a day zero product. We haven't even gotten a chance to really ship even any significant updates yet. So there is so much that we are excited to do with this. And meanwhile, the market as a whole feels like it wants to reprice upwards as well. So it's an exciting time.
Definitely. Congrats on all the success on the launch. So I'd love to dig deeper on the features that make BlackHole special. Like you mentioned V3.3 that you took from, that you saw succeed on Aerodrome and other DEXs. How does this work? This is about locking in governance tokens, but how specifically does it work in BlackHole?
Right. So the V3.3 DEX is designed to attract liquidity. And so it emits tokens each week and it pays them to liquidity providers, or the people who are depositing liquidity. And then there's another cohort of users that are holders of the black token that then burn the black token or lock the black token. And by doing that, you then become a participant on directing where those new emissions of black tokens go each week. So you vote saying, hey, I want to direct my share of black tokens that come out each week to these pools. And those pools have various pieces of revenue that they can generate for the people voting. So there's 3 pieces of this. There's the new tokens being emitted to the people who deposit liquidity. And then there's the voters who are directing those emissions. And then from those liquidity deposits, there's revenue created from swaps, and there's something called bribes, where projects can sort of buy votes from the voters saying, hey, we really want black being directed here. And the reason why they do that is because the amount of votes in black that get directed there would be worth more than the actual bribes that they end up putting in. And so there's a multiplier effect there. And we've seen that the multiplier at the beginning for some projects was 40 times. So they would direct 100K in bribes and they would end up with 4 million in liquidity in that pool, which for a small project can be life-saving, right? That's an insane amount of liquidity. And so what BlackHole is it's a liquidity engine where the projects that are able to harness that liquidity engine benefit by having an extreme amount of deep liquidity and a better trading environment for their holders. And there's a tremendous amount of revenue created from the engine to reward the lockers of the token and the burners of the token. Essentially, what happens is based on the token price and the revenue, which the token price has been normalizing after the launch and the revenue has been growing, and they're meeting, and at a certain point, there will be what we describe internally as an equilibrium, where there will be a repayment time that's fast enough that economically rational actors will start en masse locking their tokens, which will then reduce supply and be a net tailwind for token price. And so that's how these systems balance, is that the speed of the revenue, as long as that keeps growing, which it has been. Last week was our biggest revenue week at the protocol by far. And as long as that keeps growing, then what will happen is the time for repayment will reach an equilibrium, which based on my math right now, is somewhere around 1 year. So if you burn your tokens, you'll be paid back in about a year. And if you compound that by buying back Black with all the fees you make and then keep locking them, that speeds up dramatically. But that's, of course, these are all variables. So everything can change. Things can get faster, things can get slower. Again, these are in flux. Like if AVAX goes up 5 times in value, or like goes up to $100, then all of these numbers get thrown out the window, because BlackHole will probably be making, exponentially more volume and fees and all that stuff, right? There will be new token launches, there'll be new inventory, there'll be a lot new activity on AVAX that will translate into more revenue. So all of a sudden, that what would have been 1 year might be a month or 2 months or 3 months. I don't know. This is all hypothetical. Or things, if we go into a deep, dark bear market, things could get a lot slower, right? These are the variables. But what we've seen is that essentially these systems are both sustainable, long-term, as well as create the deepest liquidity and the most amount of holder revenue and fees for the exchange. So they're revenue engines, liquidity engines, and they're sustainable long-term, which is why I think the design is really important to understand. But also it's fundamentally a different type of investment from other types of assets, where in the other types of assets, you're hoping and speculating that there's new buyers that you can come in and sell to. In this case, what you're speculating on is that the market grows, or that the market sustains, and that you would like to essentially create a long-term recurring revenue source, right? And that you're assuming if the DEX survives and maintains market share, and that Avalanche essentially survives and maintains its prominence or grows, then you have this essential piece of the pie ongoing. And so that's the type of investment that this is, of token buy it is. And that's why it's so fundamentally different than what other people are used to. But for example, there was not a dime was raised for this project. We funded 100% internally. We didn't have any VCs, and we did 100% airdrop to the community of all the liquid tokens. The team only got permanently burned tokens to participate in the revenue if there ever was any. We didn't know if there would be at the start. We were hoping. Obviously, this has been a dream, but we didn't know if that would be the case, right? We had no idea. We took all the risk. And what's happened is we let the community 100% set the price, set the levels. There's no market makers, there's no team supply, nothing, right? And so that's where we've let it be completely organic. And the market has gotten so excited about this product that's created all of this revenue. And now the question is just who wants to be a part of this journey long term? And the way to express that is to burn the Black token. And so if you believe in this project long term, you believe that the DEX will exist and continue to have market share and continue to grow, then you burn the Black tokens and you essentially get a permanent, non-diluted voting percentage on the back end of Black. So you essentially lock yourself in forever, right? And that's what's exciting, is that if this succeeds long term, then once you get past that repayment period for the people buying and burning Black, again, most of this was airdrops. So there was no repayment period for a lot of the people, and there's a lot of Black being earned by LPers. But for the people who do buy and choose to buy, the decision is how long is the repayment? And then once you get past that, you essentially have this nonstop recurring weekly revenue stream in perpetuity, as long as the DEX creates revenue, right? And so it's a really cool system that we've seen as sustainable. And it's just exciting, because I feel like this is the type of thing that I hope and I believe will be institutionally interesting, right? This is what I believe Wall Street wants. They want to access the infrastructure of crypto. They want to be a part of the picks and shovels that make this industry tick. And liquidity engines like BlackHole are the exact type of assets that I believe, once they're properly understood, will be the types of things that will be extremely exciting to the long-term investors in the future of crypto, especially as you're thinking, what does it mean for equities to come on chain? What does it mean for all these things to come on chain? Well, in the end, you'll want to go and trade wherever the deepest liquidity for that asset is. If I want to buy $100 million of something, I need to go to a deep liquidity pool so I get good execution, right? And so the deeper the liquidity, the better the facility for trading. And that's precisely what BlackHole is designed to do, is create deep liquidity. So that's the end product of BlackHole, is liquidity. And then the way that they do that is with these three pieces of the puzzles. That's what I'm excited about. I think that what we've shown in the beginning is that it has extreme product market fit and dominance. And now as it matures, you'll start to see very, very long-term rational aligned parties join this journey. And I'm excited to see that, because I think that this sort of initial launch phase is just wonky. But what we've seen is extreme uptick in every single meaningful metric around the DEX.
This V3.3 mechanism is really interesting and novel, and it has been successful. But in other cases, it's also blown up. Like I think like the famous cases with Olympus DAO, I think they were maybe one of the first ones to try this out. What are some of the lessons from past projects that have tried this and it hasn't gone so well? Yeah,
I don't think that's a good. Respectfully, I don't think Olympus DAO is a good comp to this. Mm-hmm. You maybe look at Solidly, which was the original V3.3 DEX created by Andre Cronje. And I would just say that there's one of the biggest gaps that V3.3 DEXs have is that they have no ability to appeal to a wide array of buyers, and that they don't understand how to market and distribute, which is why one of the reasons why BlackHole is significant is that it's the first truly, I think, elite DeFi project that, one, has shown that it has a best-in-class tech stack, has a new model, an iterated model that is even better, I believe, more sustainable long-term. And finally, it has the best distribution because it's been created by people with the biggest communities, aka myself. Other co-founders include Becker, tons of supporters across, some of the biggest community leaders in the space. The distribution is unlike anything we've seen before. And that's why it's taken market share so rapidly. It didn't take 20 weeks or 15 months for all of a sudden all the systems to start connecting, right? It caught on almost day one, right? And so that's the exciting part about this. And now we get to see, as things have really matured on the revenue side, as well as things have cooled off a bit on the token price, it allows for this equilibrium to form, and then for the growth to happen. And that's what's really, really going to be exciting. Obviously, the growth has been happening on the revenue side. And that's why I encourage people to burn and participate in the revenue side, because the goal was always to grow that side of the pie. That's the ultimate thing to grow. And the token price is obviously extremely volatile in the early days. But as long as the revenue keeps growing, that becomes the rational sort of economic floor for why people would buy and burn the token to access that revenue. So the main goal is to grow revenue. And as you can see by DeFi Llama, revenue and DEX volume has been almost geometrically growing. It's one of the most beautiful things I've ever seen.
What if sending crypto felt more human? Pulse just launched Red Packets, a new way to gift tokens with meaning. It's gasless, gamified, and claimable inside group chats only. Think airdrops meet social cues on-chain. Backed by smart wallet tech and live across major L2s, Red Packets turn communities into microeconomies of gratitude and growth. No seed phrases, no friction, just connection with value. Check it out at pulse.social.
Nice. Okay, and why build on Avalanche?
So a few things. Like, one, I'm a big fan of Avalanche. I always have been. And I love how they have taken sort of high quality bets in gaming, as well as in general, they're trying to do a few bets that are much more high quality and much more hands-on, as opposed to other foundations that really they just try to be Switzerland. They go, well, we don't really pick favorites, all that stuff. Projects need help. Projects need support. And working with the AVAX team, they've been wonderful. Whenever we say, hey, we'd like to get in touch with these guys, or can you please connect us here or there? They've always been helpful in advancing the rock there. So they're very, very responsive, and they're very, very, they're great as a team. They execute on an extremely high level. And Emin, the founder, sets a great example for how to run not just a great tech stack, but a great org. So shout out to the AVAX guys. As far as like the strategy there, what we saw was that AVAX is one of the biggest chains that was ripe for disruption. We saw an opportunity to take what would be, this isn't having the same level of volume as like Base or Binance Chain or Solana, right? Those are sort of your tier one as far as DEX volumes and flows and all that stuff. So those are like the main markets that if that was our first DEX release, we would be a little bit like, okay, well, we're going up against some really big competitors and we need to execute flawlessly. But we saw AVAX as a market that we believed we could win outright and that we could become the dominant player in, and that the reward for doing that would be immense, and that AVAX was undervalued itself. So we see AVAX as not quite having its moment yet. And we wanted to be there for that moment. And so I believe that all those things have played out, except for now this final part about AVAX just growing in general. And that's when the exciting part will start to really hit like a truck, because all of the metrics around BlackHole will just naturally tick, upwards with that growth of AVAX as an ecosystem. So it was manyfold. It was ethos. I liked the ethos of the AVAX foundation, how they ran the chain, what they were trying to do. The tech is obviously phenomenal, but also the strategy of going after AVAX felt right. It felt like we would have the opportunity to have a full and complete victory. And that's what I think has been shown, is that this has been a complete victory. And we now have a chance to iterate on the product, have a profitable product, have revenue coming in to support the development of the project, and continue to just expand and grow aggressively. And that's exactly what we wanted. We wanted to come in. We didn't want to sort of have a limp success or a mediocre success. We wanted to have an explosive success. And for that reason, we thought AVAX was a prime target for all those reasons. And they've all pretty much played out perfectly. So I would say that our decision to go with AVAX was very, very key in how we wanted to approach our first sort of venture in DeFi.
Super interesting. The strategy makes a lot of sense of, seeing an opportunity there to win outright. You mentioned early on wanting to give projects a reason to launch only on DEXs and not need to launch on centralized exchanges. And I see kind of the idea of having a structure of like rug-proof fair launches for tokens. Can you go into that kind of strategy within BlackHole?
Yeah, so obviously I think the term rug proof is a weird one, because in the end, if a team decides not to show up and keep working on a project, then it's a rug, right? I mean, in the end, you can't predict people. And the thing that I've definitely found over time is that most projects in crypto do fail. So we can't guarantee a project's going to succeed, right? That's not up to us in the end. Mm-hmm. But what we can do is provide a better system for aligning the excited early community members with the project itself. And that's the goal of the Genesis pools, is to create a way for community to participate in the project in a less risky way, and the project to effectively keep those excited community members on the boat a more mid to long term, as opposed to having the sort of super high risk launch where a lot of them have gone badly and people then become soured on the project. So that's the goal of the Genesis pools. We haven't gone live with the Genesis pools features yet. We have just had so much success with the core DEX functionality. So the Genesis pools are something we'll be rolling out here very soon, but it's definitely something we're excited about. And, you can think of this, if you know the term liquidity bootstrapping, it's our version of liquidity bootstrapping. Again, creating deep and rich liquidity that's less about the community aping in and more about the community helping build that liquidity and being rewarded for that over time, which is a less risky way to jump in, and hopefully creates more of a mid to long-term synergy between community and project, as opposed to this extremely short sort of hype launch. That's really the goal.
Awesome. About the DEX itself, I understand you're using different DEX models, right? You're using the Uniswap V2, you're using the Curve kind of concentrated liquidity model. Talk about the decision to use kind of this modular design and how that's going.
Yeah, I mean, so first of all, I'll just say we have an incredible team. My hat goes off to the team. I have never worked with such a high level team. And that's one of the reasons why I'm so excited by what's happening is people are used to, and specifically influencers, doing just low effort stuff, right? They're doing low effort projects, right? That's just sort of the reputation. Now we get to, for the first time, I think, see what does it look like when a best in class team, when an elite team building on the bleeding edge, but also leveraging in a smart way everything that's been created. Most protocols like DeFi protocols leverage existing proven pieces of tech, like the atomic swap, like the Wei token swap. Often these are go back to like original code, and you want to use code that's been proven because it reduces the chances of an exploit. You never can 100% reduce the chance of an exploit, but you want to reduce that as low as you can. So essentially, when you look at most DEX architectures, they're cobbling together the best in class features that are out there. And because we have an open source smart contract ecosystem, you can see the way things are built. And so the team built what I think of as an incredible set of features. And even though there's other features that have been leveraged, getting these all to work, it was an extreme lift, and very, very hard. And I don't think a lot of teams could pull this off. And so that's what I was so excited about is they built an amazing product and they leveraged some of the best in class innovations from concentrated liquidity to customizable fees to the vote escrow model, and then created a whole new token model that iterates on the V3.3 model, added in the concept of token burns as opposed to token locks. And that was to, again, increase trust to say, hey, look, we as the team don't just start unlocking tokens down the road. We actually never get tokens. We have permanently burned tokens. And so that is, you never have to worry about the team supply coming into the market. And so that's one of the big benefits here is to create that added layer of trust between the project and the community. And so that's where I think, the innovation has been in amazing tech. Obviously, some of it has been, standing on the shoulders of the giants that came before us. As with all great DEXs, that's pretty much the case. Then you also have amazing token model, which is, no one has the exact token model that BlackHole has. It's an iterated version. And then you have best in class distribution. And so when you combine those three, you get magic. And that's what we're seeing from BlackHole. And you've really only seen just the beginning. And so people who know me know that I take an extreme long-term view of success, and this is no different. This is just the start of what I hope to be, hopefully something that lives longer than me.
Okay, so you've said that this is just the beginning. So we know that you have launched a very successful DEX on Avalanche. You also talked about this token liquidity bootstrapping mechanism that's coming up with the Genesis pools. Okay, now to start wrapping up, I love your view on just like the DEX space more generally. So you've obviously taken an opinionated view on the DEX structure and tokenomics with how you built BlackHole. But where do you think the space is going? Like with DEXs and liquidity launching on so many different chains, how will that look like for the end user?
Yeah, I mean, in the end, I believe that a DEX should probably, I believe multi-chain is going to be hard to compete with these liquidity engines on a single chain. Like BlackHole, because it's focused on AVAX and will always be focused on AVAX, it'll be hard for a multi-chain solution to come in and offer the same rewards for liquidity on AVAX because we're 100% focused on a smaller design space. So if we take, say, there's $230 million at TVL, if we're focusing that TVL specifically on the most important pools, right, on AVAX, then it's going to be hard for, even if you have $1 billion in TVL, but it's spread across 3 chains and the incentives are spread across 3 chains, then how do you compete when we're focusing significant incentives on a very small amount of pools that are the most important ones? We're going to outcompete you on those pools. So we're going to deliver the deeper liquidity and the better experience on those pools. And people are going to have to route their swaps through us if they want the best execution. So that's the concept, is that by being a specialist and by being niched and focused, you can win the entire or the meaningful part of the total addressable market. And so I'm a big believer in that cross-chain is going to be awesome in the future. There's going to be tons of services that enable it. But as far as the liquidity engine, that should be focused on a single chain. And that's why we have BlackHole is resoundingly focused on AVAX.
Okay, so that means that for now, like no plans to launch on other chains. And then for your, you mentioned kind of the tokenization view, right? That all assets will be coming on chain. How do you see BlackHole fitting there in that vision?
We'd love for BlackHole to have every meaningful asset, stocks, commodities, bonds, whatever, you name it. I believe that the regulatory framework will expand to allow for that. And so we'd love to see, if it's an asset that people want to trade, we'd love to see a trade on BlackHole. And we'd love to offer deep liquidity and make it so that anyone can trade in size into their favorite assets, use their fees that they generate from BlackHole to swap into any asset they choose, whether that's real estate related, stock related, whatever. Again, I don't know how this is going to play out from a regulatory standpoint, but you heard Paul Atkins say that he wants to enable this, and we'd love to have that type of activity on BlackHole. But whatever assets people want to trade, we want to give them access on BlackHole. That's what we want. We want to build extremely deep liquidity for those assets.
Then moving forward, what's your big long-term vision for BlackHole? Like if you're successful with all your plans, what does that look like next, I don't know, decade?
I mean, you'll have to wait and see. We have a lot of stuff that we have planned, but one of the things that I found is that the most fun part about projects is finding out something new. And I found that there's no value in putting out your plans early. In fact, it's negative value because you essentially front run the excitement of it. And then once you deliver it, people just think, oh, well, that was owed to us. You said you'd give it to us, so we've been expecting it. So it kind of just changes it from like doing your homework to like delivering something exciting. And I'd like to think that I've been able to deliver excitement to the token holders. And that's what I want to continue to do, is deliver to them an experience that gets them emotionally as well as sort of, logically involved. But I want them emotionally involved in the journey, knowing that we always have something really, really cool coming. And so, we're not going to be putting out our plans early. We don't need to. We didn't raise any money. We never had a roadmap. And so we're not going to start doing that now.
Interesting. Okay. Well, I guess we'll just have to stay tuned. But so far, it's been working out. So congrats again on the launch. And yeah, really great chatting, really, interesting takes on the market. We'll see what plays out. I really like the idea that this is kind of a longer, more fundamentally driven crypto bull market. But we'll see. Like you said, it's only a few months away, whether we know if that's the case or if we're kind of in for a big correction ahead of us. For now, let's enjoy the bull run, I guess.
Thank you so much for having me.
Thanks.
Bye.